Hello, everybody, and welcome back to another episode. So today we're going to talk about the strong performance of the tech sector so far this year, which has been up about 20% versus the broader market, which has been up only about 7%. So pretty much, well, over twice the return that you would have got from the broader market, which is pretty weird when you kind of cast your mind back to 2022 when tech performed really, really badly. So Baylee, before we get into why tech's performed so well this year, can you just set the scene a little bit and explain why tech did perform so badly last year?
Well, as we all know very well, 2022 was a pretty bad year for markets. War broke out, oil prices and inflation soared, and many feared the beginning of a recession. But what particularly hurt the tech sector relative to other sectors of the market was rising interest rates. Tech companies and startups, they relied on the cheap money that near 0% interest rates provided. And the hikes meant that investors became less willing to put money into businesses in hopes of future returns, and instead they sought that immediate cash generation. And that's meant a number of companies have had to start downsizing and cutting jobs. But on top of that, inflation didn't help either, with parts and equipment becoming more expensive, and a stronger dollar meant that US companies were getting less income from overseas. Overall, it was the third worst year for tech after 2008 and the bursting of the dot-com bubble in 2000.
I almost regret asking that question because it's sending shivers down my spine just thinking about how bad 2022 was for a year for markets. But with interest rates going up, I can understand why that would be bad for tech. Like that makes a lot of sense. But what I don't understand why so far this year is that tech's performed really, really well, but inflation's still going up, interest rates are still going up. So how can it performing well? How can tech performing so well so far this year when they've still been exposed to the same problems that caused them to perform so badly last year?
Yeah, surprisingly, it's more due to that interest rate argument, but I'll try my best to explain. So markets started to believe that mega cap names, those that would have better access to financing, wouldn't be so affected by credit tightening, which is basically interest rates going up and people worrying about the recession. So banks being a little bit more cautious about who they're lending to. But if you're a big mega cap tech company, that's less of a concern to banks about that lending. Markets are thinking that these tech names will see a benefit of lower rates and are seeing through to those rate cuts being priced in the future, which is going to be beneficial to the sector. But to pull out one specific example as well, we can look at Salesforce. And they're very much a growth company relying on low interest rates, and they've been doing a lot of M&A to grow. But they've reorientated their business. They got rid of 10% of their workforce, they've cut a lot of their costs, and they've tried to move from a growth tech company to more of a mature tech company, something similar to Microsoft. So it's really interesting to see companies try and reposition themselves to be a slower growth, more mature business.
Interesting. There's a few things then that have been feeding through to a bit better performance in the tech market. So my final question is more along the lines of, well, I can understand then from what you said why tech has performed well, but does it really deserve to be 20% up when the market was up 7%, or have people just got a little bit over optimistic with the prospects for tech companies?
Well, if anything rallies so much so quickly, it makes you think that it might have gone too far too fast, and maybe that might explain why we've seen a little bit of a pullback at the start of April. But given that we've seen stronger data out of the US, we think that there could be a case for interest rates to stay higher for longer than what the market is currently predicting. An earnings season is going to be particularly interesting for the tech sector too. The threshold for profits to please the markets is now quite high, so perhaps there is some room for disappointment. What we've seen so far shows that there could be some disappointment at the margin, but it's too early to say for sure. Certainly food for thought though.
Okay, so it's one to watch and wait. But Baylee, thanks as always, because that was really interesting to try and understand why tech had performed so well this year. We'll see how it continues throughout the rest of the year. But with that, that's the end of the episode. Thanks again, and thanks everyone for watching, and we'll be back again next week with another episode.